Our fund actually invests in around 60 China A-Share stocks. We don't invest stocks in the offshore market like those listed in Hong Kong. And as you know, for China, we have more than 5,000 China A-Share listed. So typically, our very selective approach will be one of the key features for our portfolio. Our investment process is a combination of active stock selection and also careful risk management. Research is the core of our approach because we have our in-house dedicated China research team to do proprietary research and analysis. These also include grassroots research, which provide us additional, independent, and objective information. Therefore, we construct our portfolio in a way that performance will be counted on active stock selection. China A-Share market is dominated by retail investors, which accounted for around 70% of the market turnover. And the very different investment style for the retail investor comparing to the institutional investor, in particular, they are more short-term, more momentum-driven, actually cause quite a high volatility in the market, although they could improve the overall liquidity. In terms of volatility, for example, in last year, actually there are more than 50% dispersion between the best performing and the worst performing sector. In order to mitigate this risk, we use our sector neutral approach. We don't want, and also diversification, we don't want to rely too much on one particular sector or one particular stock for the performance. That's why we have this approach to handle the overall risk. So for G, governance is always important in the China market. And over the years, it has been improved over the time and actually is still below the international standard. Therefore, we have spent a lot of effort to focus on the research of governance. And for E and S, basically, is also important in the China market. As you know, China has the carbon neutrality target. So basically, it will have impact on different sectors in different ways. Therefore, it's also something important that we need to be aware of. One key feature for the China A-Share market was a very low correlation with the global market, mainly due to the different investor base in the China A-Share, which are mainly retail investors, as they behave very differently comparing to the institutional investors. Such low correlation can actually provide good diversification to a wider portfolio. While there are clearly risks associated with investing in China, we do see good growth opportunity in the market. Therefore, we think a current situation when valuation goes more reasonable, it is actually a good time for long-term investors to get back into the A-Share market.